Before I get the video started, I would just like to thank you guys for the continued support of EatSleepProfit on YouTube. We've been 3 years strong and it's going great, especially we just broke through 60,000 subscribers. I love every single one of you guys. I hope you guys enjoyed today's video. Thank you.
Since I've been trading full-time for the past 3 years, some things change and some things stay the same. I've traded over 1,000 different stocks over the years, and some stocks twice to 3 times in the same day. What stays the same is the way that I look at every individual stock and how I take advantage of certain opportunities as they develop. This will give you a good jump-off point to developing your own strategy or even modifying my own to work with yours. Strategies aren't necessarily unique to an individual, but experience, emotional maturity, and most importantly, the ability to adapt to every situation will be crucial to your longevity in the trading world. The wrong question would be, what is your strategy? The right question would be, how did you develop your strategy? Rather than copying away somebody's trades, you need to understand why a certain action is done, and this will allow you to fish for yourself. The first action I do when I wake up is look for the biggest movers of the day, especially in the pre-market trading, on both ends of the spectrum, the biggest gainers and also the biggest losers. If you need to know how to scan for these, you can watch this video by me here. Large moves create opportunities, and reactions will be much easier to spot than play the initial run-up itself. Specifically, the biggest gainers on the day will be the biggest attraction to the majority of traders in the morning. You want to stay where the volume is heavy and especially above 1 to 2 million. The more volume, the better, and the charts will be much clearer as the volume pours in. Now, the volume needs to have a reason behind it. There's a method to the madness. You should be asking, why is this stock moving rather than others, and you need to pinpoint that reason. The most common reason is news catalysts. These are going to be the fuel to the fire, but if there's no fuel, especially no news, then that's when the red flag should appear. The typical 4 catalysts you will be seeing on runners during the day are earnings reports, FDA news, contracts, and mergers. Make it easier on yourself and find the runner first, then research the news rather than spending hours scouring news sites, finding stocks that have either no volume or too high price for your account. So now you're looking at a stock that's moving with news behind it, but the work doesn't stop just here. You need to now look for the setup. Now you'll hear me say setup and strategy all the time, but they're not one and the same. The setup is what the stock specifically needs to do to get in an area that will be a good play. The setup I look for either has 2 outcomes, and depending on if you go long or go short, can give you twice the opportunity to make a solid trade. First, what I look for are commonalities within the pre-market trading. Areas the stock has trouble breaking above or breaking below. These will give solid levels of support on the lower end and resistance on the higher end, which can turn into breakout or breakdown points. It's not just when stocks reach these levels that they become good buys, it's the small details at these levels that are very significant. A good thing to look for is the price of resistance to actually be confirmed to be broken. Confirmation of breaks are when the price can retrace to the broken resistance or breakout level and sustain above that point and head higher. The initial breaks are very short-lived. So the only way to maintain consistency would be to scout for small targets, which in my experience can make consistent money, but not very conducive for smaller accounts. Now, in the situation where the level of resistance is tested and rejected, can open opportunity to bet against the stock or short sell it and make money. Shorting is a very important concept to know, and this will probably ruffle some feathers, but you shouldn't be live trading without knowing how to do this. Shorting a stock is essentially selling before you buy. You borrow shares and sell them for a profit, but you have to give those shares back to the broker, so you buy those shares back at a cheaper price and make money in the difference. Since a lot of stocks will have the ability to be shorted, you're going to need to spot when shorts have an opportunity at play, since they can cause a massive drawdown in the price. There's a saying that if you're a hammer, everything looks like a nail. And that is a very true statement when it comes to the markets. If you only know how to buy, then everything looks like a long setup. If you know how to short also, then you will have the full picture. Plenty of times my knowledge of shorting has saved me from buying into a position that was heavily devalued afterwards. Now, before you buy, you have to assess the risk of playing the stock at that time. What is the potential loss and potential gain on the table? I measure risk to the nearest level of support, which is a natural boundary that protects your position. And your entry price in relation to the support shows how much you're willing to be down before making a decision to cut the trade altogether. This is where you start to think for yourself and learn to weave around very risky opportunities and only look for trades that at minimum can give you a 2-to-1 ratio of risk to support and the target you aim. In addition to this, some indicators can help the process, which I use the 9-period EMA or the 9-period exponential moving average. The way you start to use indicators is, let's say on a position, the stock has confirmed support at the breakout level, but the move seems very, very quick. And we know the quicker the spike, the more likely it is to correct. You can always wait for the EMA to correct above the breakout level, giving yourself more confidence that support is really there and ultimately having a more secure trade. There's a lot of techniques I use like this that you will learn over time, but first you need to survive before you can thrive.
Now, I really hope this made sense to you guys. I know at the end of the day, one or a couple of people out there are going to really make sense of all this. Is going to start to help their trading. This is all that really matters at the end of the day. Now, it seems very, very simple at the end of the day how easy my strategy or what to do technically is. But some of the hardest things you're going to interact whenever you really start to trade is controlling those emotions. I mean, emotions are going to run wild, especially as you're trading, because you're using real money to actually trade. Now, what I find as a good helper to that is going to be scaling down accounts, not using a lot of money. We're in a commission-free environment now, so you can start with very, very small amounts and look to get your feet wet and get some skin into the game. It seems very, very simple in the beginning, but it really, if things are going to start to break down in certain situations, you're going to need to be able to guide yourself around those points. And a lot of that has to deal with emotional maturity, the ability to adapt, and staying with a consistent strategy. A jack of all trades, master of none. I see a lot of people, they'll bounce between strategies, go from here, go to there, different types of trading. They'll jump to options, they'll jump to Forex. There's nothing wrong with that. It's just the fact that you need to stay in a certain niche or a certain market for long enough where you get to build that mental library of multiple setups, what can go wrong, what can go right. So every single day you're going to be at an edge the next day and a little bit more of an edge the next day. So I've been trading the same price range in the same niche of stocks for 3 years full time and 4 years overall. Whenever I first started that first year, just me learning the markets. So the thing is, I've been in here a decent amount of time. I'm not a veteran by any standards, but I've been here for a good amount of time. So, I've seen a lot of things come and go. We're still here. We're still pushing strong. Every year gets better for me. So I hope you guys enjoyed today's video. If you guys ever have any questions, you can always email it to me at EatSleepProfit@gmail.com. If you guys ever need some one-on-one training by me personally, we can definitely get that sorted out. So anytime you guys ever need some help, just let me know. I always set a goal, like every year I want to break at least 10 people past the PDT rule, which is the 25K rule. Last year we did, and especially my little closed group, and hopefully hopefully this year, 2020, we're in February 17th, 2020. So hopefully by then we can get some more people on board and breaking through those goals. Just set those goals and let's break through them. So hope you guys enjoyed today's video. It's Jay from EatSleepProfit.